Welcome, homies and homettes. Welcome to another edition of the Kevin Strong Show. And in this video, we're going to talk about why sellers are they're just throwing money at buyers. So probably shouldn't have done that because I have to pay child support. But all jokes aside, I am current. For those of you who are wondering, I am current. So in this video, we are going to talk about how sellers are just throwing money at buyers. And stick to the end of this video. We'll also talk about how I think the FHA mortgage situation is really going to be one of the first cracks in residential mortgage in terms of a big deal. And finally, last but not least, stick around to the very end when I'm going to give you a good tip if you don't have a lot of debt in terms of what should I do with my tax refund. So without further ado, we're going to get ready and jump into this article that talks about how sellers are making these concessions to buyers. If you're enjoying this type of content, please do me the honor of smashing that like button. And if you haven't subscribed to my channel, I please encourage you to do so now and share the content if you are enjoying it. So without further ado, we're going to go ahead and jump into this article. The title of this article is called Home Sellers Are Basically Throwing Money at Buyers Right Now. Now, remember about a week ago or 2 weeks ago, I did an article and that lady's name was Jessica Dickler. Jessica Dickler needs to meet Emily Peck. And maybe they could get together and make music together. But enough of the jokes. Let's go ahead and jump into this article. Shares of home sales where the sellers gave at least one concession to the buyer. So here's a graph that basically shows from June 20th to December of 2022. Basically, there's a 42% of transactions where sellers are making concessions to the buyers in order to entice them to purchase a home. As you can see here in July of 21, and then back in July of 22, this is a technical analysis. This is actually called the double bottom. That is not my sexual orientation. I'm just giving you the technical analysis of the graph. So you can tell I had some coffee before I started this video. But all jokes aside, this is called a double bottom. And typically when you get a double bottom from a technical analysis perspective, that normally indicates that it's going to shoot up. So I think this is going to continue to go up in terms of sellers offering more concessions to buyers in order to entice them. I'm going to repeat a theme throughout this video. And some people have a different opinion about this, but I don't think you should overpurchase because of interest rates. I'd rather pay the right price for my home, provided that I can service that debt, even at a higher interest rate. The price to me is more of a paramount concern than the interest rate, assuming that you can service that mortgage debt at the higher interest rate. So we're going to jump down here and talk about some of the things in this article, why it matters. So here's the details. 42%, as I said earlier, of sellers offered at least one concession to buyers, often in the form of cash, credit for things like repairs, closing costs, or mortgage buy downs, which basically means you buy down the rate, but eventually it comes back up. That's up from 31% from a year ago and back to the same level as July of 2020, when basically, we were almost in a lockdown, or real estate agents were considered essential workers. That was the beginning of the housing frenzy. But think about it. Back then, the sellers held all the cards. They dictated everything. People were waiving appraisals, financing, home inspections, things like that. So now that pendulum has swung all the way over to the buyer side of things. And now the buyers are starting to ask for some significant concessions from the sellers. More mortgage rates went up. Obviously, that had a lot to do with it. Mortgage rates are double compared to what they were in 2022. This article basically says here, since sellers built up so much equity over the past few years, they've been willing to shell out more cash than before the pandemic. I'm going to push back on this particular bullet point of the article because, in my humble opinion, I think sellers are slowly starting to wake up to the fact that the housing market has turned to a negative trend, and they know there's more pain forthcoming. So in light of the aforementioned, I think you have sellers willing to capitulate their harsh stance on a firm asking price, and as a way to move the transaction along, they are willing to make concessions. So I think it's more about knowing where the housing market is going and seeing how their housing prices or housing equity has declined. I think that's more of an issue of why they're doing it, more so than the amount of equity they have in their home. Or it could be a combination of both. But I think it's the former more so than anything else. So here's an example. This guy had a client that got $25,000 from a seller on his $650,000 house to pay for a roof. Plus, they threw in all of the home mid-century modern furniture for $10. Another collected $10,000 to help with closing costs. Guys, and you've heard this from other channels. Orlando Minor has a really good channel too. You don't overpay. You just don't overpay. Yeah, the closing costs, I mean, the concessions to closing costs are nice. The modern furniture is nice. But at the end of the day, if you're overpaying, you're overpaying. And these concessions typically don't equate to the amount that you're overpaying, especially in a declining market. Plus, home builders are offering concessions to real estate agents who bring in buyers. This was not the case at all. It says here one home builder in Houston is giving agents a $10,000 bonus on top of the typical 3% commission and a chance to win a Mercedes. Think about this. Home builders don't do this unless they see a problem. A year or 15 months ago, you couldn't sniff a home builder to basically try to get their business to move property for them. Now they're offering all these incentives to reach out to some of these agents to help them unload this inventory. What happened with this home builders industry, in my opinion, these guys bought into the FOMO, fear of missing out, over a year ago, because it takes a long time to get a house approved for land, building, and all this other stuff, planning. And by the time you break ground, you can be in a totally different real estate or mortgage environment than you were when you decided to build this subdivision. So what you're starting to see happening in places like Texas and Phoenix and other places around the country, these people are buying these homes, for $650,000, let's say 15 months ago. And now these same homes are being offered for like $500,000 or $480,000. And this is not hyperbole. This is really, really happening. So the baseline is the most recent sell. So you can see a lot of people there's going to find out that there's $150,000 homes that are selling. I'm sorry. People who bought homes in new construction for $650,000 are going to find out in the next 6 to 12 months, that same home, same roughly square footage, same amenities, is probably 30 to 40% less than what they purchased it for. And a lot of those people may have purchased those new homes at $650,000 with special first-time home buyer financing, which means they didn't put a lot of money down. So on top of being underwater by 30 or 40%, let's just add on another 10% on top of that, 6% for the real estate agent if you're trying to if you're trying to sell the property, 3% to the listing agent, 3% to the buying agent, and another 2 to 3% for closing costs. Not to mention the numbers that we're talking about now. These are nominal numbers, folks, and this is something I'm slowly trying to get you guys acclimated to. These numbers are not adjusted for inflation. Once you apply real inflation to these nominal drop in values and numbers, the situation is much, much, much worse. So let's go ahead and see if they talk about anything else. Yeah, so there's a couple bullet points here. With the concession, buyers pay less money, but list prices and closing prices don't change. They're kind of masking the true cost of the transaction. I agree with this 100%. This is why I say focus on the price. Don't get bamboozled by basically looking at concessions. You don't want to overpay for a piece of property. Home builders especially like them because they're reluctant to lower the price and anger folks who recently bought new homes in the same community. See, this is exactly what I'm talking about. Just imagine you paid $650,000 and then 15 months later, your next door neighbor paid $500,000 for it. That would tick you off. So very interesting article here. The information I wanted to share with you guys here about FHA and my little tidbit about if you don't have to pay any significant debt, what would be a good use of your tax return? So they've got something called EPDs, early payment defaults. And what EPDs are is that this is a matrix that's tracked to see who has defaulted on their mortgage within the first 6 months of actually moving into the home. Okay. With regards to FHA, 25% of 25% of homes that were purchased in the first 9 months of 2022, there's a default. They've either missed a payment and they're underwater, or they're underwater. So think about that. 1 in 4 FHA purchases in 2022 is now underwater. Okay. 75% of FHAs purchased during that same time period have less than 10% equity. And we all know from a macro standpoint, in aggregate, where home prices are going in 2023. They're going down. So this stat is going to get much, much worse. You can easily see yourself by the third or fourth quarter of 2023, close to 90% of folks who went FHA are probably not going to have any equity. Once again, these are homes that are typically set up for people with marginal credit or low down payment arrangements, so they don't have a lot of reserves. FHA typically does not require you to have 6 months, what's called PITI, principal, interest, taxes, and insurance. So in the event that there's a disruption in your income, you've got reserves set aside to make sure you can make the payment. This is why the default rate when it comes to FHA and VA loans are so high, especially with FHA. So finally, my tax tip is that if you don't have to pay back a bunch of debt and you're going to get a decent tax return, why don't you think about buying a deep freezer and buying food, specifically meat, in bulk? A lot of you know that food prices are continuing to go up despite what the government is telling us. If you set aside either your rent or your mortgage payment and your car note, the third probably biggest bill that you have consistently on a monthly basis is your food bill. And I'm sure those of you who either shop, male or female, have seen a significant increase in your food expenses in 2022, and it's definitely going to continue in 2023. So in my humble opinion, in summary, sellers are going to continue to make concessions to buyers in order to move property. Please don't overpay or get caught up in the emotion of how much they're basically going to give you in terms of applying towards closing costs. If you're going to get ready to buy a home in this market, you should easily be looking for a 15 to 20% discount from the list price. And that's the starting point if you have to buy, but please don't overpay. So you know my motto, please keep your credit score up and your debt down. Once again, please smash that like button. Subscribe to my channel if you haven't subscribed yet, especially if I've made you laugh. If I offended you, hey, I'm sorry, but that's my sense of humor. This was the Kevin Strong Show. I'll see you guys in the next video, and please take care.